let's shuffle on to TUI, because this is connected to something that I was going to talk about last week, but then we ran out of time and I decided it wasn't very important. I was going to talk about IAG, which is International Consolidated Airlines Group, better known as British Airways, basically, for the UK shareholders. I wanted to talk about it last week because I talked about a FTSE 100 stock I liked, and I wanted to talk about one that I don't. And IAG has been the worst performing FTSE 100 stock for the last 5 years. It's down 60%, or at least as of last week, these stats are correct. I didn't bother updating them this time. It was down 60% over a 5-year chart. And to me, it just looked like a value trap. It looked like it pretty much was 60% worse of a business than it was before. Or at any rate, I thought it reached a value that was... it didn't strike me as a screaming buy. Debt had gone from £1.5 billion to £10 billion. The interest on that was taking up 72% of the company's operating income. And I thought, I was going to say, well, look, I can see two ways out of this if you have debt. I mean, not that they're both realistic, but broadly speaking, you could either pay it down out of your earnings, or you can pay it down by printing loads of shares. And when your interest is chewing up 72% of your operating earnings, probably ain't going to pay much of it down like that. So I figured, okay, there's a big print coming, stay well away. It was going to be... I've condensed that segment down into the space of about a minute and a half, but those are my thoughts on IAG. I could have easily picked on TUI for what it's worth, other than TUI isn't a FTSE 100 stock and therefore would have been disqualified. It's probably the main reason I didn't choose it, to be honest. But... both stocks, TUI and IAG, have been doing well this year, and TUI has been doing well over this last day, specifically, Thursday, 6th of April. They had a rights issue earlier this week. So a rights issue is basically printing shares and selling them at a discount and offering your shareholders the opportunity to take advantage of those rights before they go on kind of public offer. And TUI were offering an 8-for-3 share rights issue. So if you own 3 TUI shares, you get the chance to buy 8 more at a discount to the price. And they were doing that to pay down a loan to the German government, basically, because their debt was also pretty badly out of control. Anyway, rights issue happened, stock went down and so on. In doing that, they have managed to, I think, basically take the hit there from their debt. And they've brought their debt down by, I think, about 80 million or so, down to about 90 million now. And that's a much more kind of, or the interest payments, sorry, on their debt have gone from 80 million, gone down by 80 million to 90 million, so down from 170 to 90. But their share price has gone up 10% today, and it's been a good day for UK stocks in general, unless they're called Forterra. And they've gone up 1% or so, which is a lot if you're the FTSE 100. That's like 3 years worth of gains. FTSE 250 has done the same. But TUI is up around 10%. It's dragging the market higher this time rather than sandbagging it. And the reason is they're looking quite optimistic about things. They are in a situation where they see demand for Easter holidays, in particular the kind of shorter whole package holidays they do to places like the Balearic Islands and Turkey and so on, what they call guaranteed sun, insofar as such a thing exists, but you get the idea. That's back at pre-COVID levels, so there's money coming in. They've managed to get away with increasing prices to try and offset some of their high kind of inflationary fuel costs and so on. And the stock is up 10% today. It's still half where it was in 2019, so it doesn't show much sign of getting back to those levels anytime terribly soon, but it's up 70% since the start of the year. Having seen that rights issue happening, I had a big objection about TUI, which was there's too much debt in this company to be of any interest to me. Okay, now they've taken their hit on it and their share count is much higher. I now look at the kind of company and think, well, that's in better shape than it was before. Okay, there's a lot more shares to it, but I'm no longer worried about it kind of hemorrhaging money via interest payments. I'm not interested in this, Steve, but I guess a couple of questions. Do you think you could get interested in a stock like this if it managed to repair its balance sheet? And do you think a similar thing might be coming for IAG, i.e. a kind of rights issue followed by a jump because the thing looks much more stable now?
I mean, potentially. It's really tough to say. TUI is not a stock that I've ever really spent any time looking at. My only kind of like, and I mean, I'm 1,000 mile view of TUI is that all I ever hear about them in the news is that they're doing a rights issue. I think I seem to remember them doing one just after the pandemic as well, which obviously wasn't enough because they took state aid as well, and now they're doing a rights issue to pay back the state aid. So, to be fair, I'm just reading through the rights issue now. They've explained it very well on their site. If anybody who hasn't quite grasped it from what we're saying, it is worth just nipping over to their website and reading it. But I don't know, Steve. Is it something that would be interesting to you? I'm not sure it's interesting to me. It's not really a sector I really have much love for.
I don't think it's of interest to me, and I feel the same way you do. It feels a lot like an airline, which I tend to avoid. I know it's not strictly an airline, there's other things going on as well. Here are a couple of thoughts for you. Your point about their website and the rights issue, I entirely agree with. I think when I read about it on their website, I thought they were very fair and very upfront and very honest with their shareholders about why they were doing it, what the likely impact of that was going to be in sort of fairly non-speculative terms, right? Not as in share price going to go any which way, but look, here's what we expect to happen to the balance sheet. Here's why we have this debt. If I were a TUI shareholder, I would think I'd been treated very fairly as a result of this. They're making a decision they consider to be in the company's best interest. You can agree with them or disagree with them, but I thought this was good communication from that management team. I kind of also think, as I'm not a TUI shareholder, and maybe this is slightly mean, but to your point from before, their share count has gone up an awful lot during the pandemic. And again, this isn't to blame them for that. I don't expect companies like that to be hedged for a pandemic particularly, so I expect them to get hit hard with that kind of business structure. But I mean, maybe it's the case that they've had so many rights issues now, they've kind of got the hang of how they work and how to communicate them to people. And that's not really the sort of thing that you want to have large amounts of practice at doing as a company. But I wonder whether that's got something to do with it. They do love a kind of rights issue because it's what they have to do, having taken on a lot of debt as well.
Yeah, they've had plenty of practice. You're definitely right. Yeah, I do. Like I say, my only sort of knowledge of TUI, and I'm surprised it wasn't the news release below this one, that it was the previous rights issue, because they really haven't had an awful lot to shout about recently. I'm just looking at the discount now is almost 40%, Steve. So that's a huge discount for people buying, especially when the share price has already fallen from about 21 euros to 6 now, or whatever it is. But I'm looking at the rates as well, Steve, and the rates have actually fallen by about 70%, which makes me think, I wonder how, if this is actually going to get fully subscribed or not, or whether they're going to get just some of it. I haven't seen, there's nothing on their website to say that it is fully subscribed, or not that I can see.
No, I didn't see anything about that either, and I wondered the same thing, because the impact on that debt does, well, it depends on it being at least well subscribed. Obviously, the more subscribed it is, the more the debt comes down, the more the dilution happens. But if you're TUI at this stage, you are playing for maximum dilution and maximum debt reduction. You're not doing this to have it kind of half work.
Yeah, this is a thing. I wonder how the share price reacts if it doesn't get this full thing, because it's an acknowledgement that the balance sheet is weak and that they need money. And if they don't get the money, I don't think this share price is going to rebound to sort of like make up the level in the middle, Steve. And that's not a good thing.
No, I suppose it's an interesting thought, the rights falling quite sharply, because unless I'm reading this completely wrong, the rights get more valuable as the share price goes up, right? You have the quote-unquote right to buy these shares at this price. Well, very nice thing to do would be buy them at that price and then sell them at the 10% push share price that you got them at, because the rights are sold at a discount to where the shares were on, I think, or middle of last week or something like that. So that's kind of interesting to me, and I do wonder whether this might not get fully subscribed, or whether this might be for someone a bit more enterprising than me, a kind of neat arbitrage opportunity here.
Yeah, potentially. It's definitely not something I think I could get my head around. Again, I agree the same as you. The only way we've ever thought about playing this airline industry was through Airco, I think, and they've got a big old pile of debt as well. So, AirCap, sorry, and yeah, I just wonder. I wonder. I mean, I'd be interested to hear if anybody's holding it. Who's listening, if they could give us a quick why you're holding it, and if you're subscribing and why you're subscribing and what you expect from it in the comments. It'd be really interesting to us, because again, it's not a sector we're particularly hot on. But Steve, have you got some more?
Here's my closing thought on this, and it has nothing particularly to do with TUI, but it's a general thought about how I evaluate stocks. I've been, in my head, quite quick writing off TUI, and I think for pretty good reasons. I think that big pile of debt is a legitimate concern. There's a dilution coming. All of that is fair enough. I read the other day someone just saying, look, on the other side of this rights issue, this company has a lot going for it. Demand is strong. They're increasing prices and demand is not going away. That's a sign there is kind of genuine pricing power here. They're offsetting their costs fairly well. That's a kind of point that would have been entirely lost on me a week ago. I would have just looked at it and said, big debt pile, not interested. Which does mean that I start to think, well, now that that debt pile has gone away, my only real argument against this awful balance sheet and so on has kind of evaporated with it. It's nowhere near a buy for me at this point. They can. I'll come back to them when they start making bricks or running a bank or something. But I am kind of thinking that there's a lesson in this for me as when I kind of think about stocks and analysis, basically. And that's, I suppose, the theme of the last half an hour or so when we think about Morgan Housel and Howard Marks and this one. I'm not particularly interested in it from a buying perspective. I am interested in it from a perspective of trying to make myself a better investor and know more stuff.
Yeah, I think it's one of those ones that, again, it's just one of those ones maybe just stick on your watch list, but for no reason other than just to see what happens, I think. It's an interesting move. I think, like you, just looking at the balance sheet now, it looks like they need a rights issue to clear some of that debt. And the worst part is it looks like it's only going to half it, so... it does look more manageable. It looks more manageable on a company that makes money. TUI is not one of those companies at the moment, but they have had a pretty hefty amount of debt sort of weighing down profitability. So it's one of those sort of swings and roundabouts kind of things. This might actually be the thing that saves TUI if demand returns in the way that they are trying to tell us that it's going to return. If it doesn't return, then this is just going to be a slow grave for TUI.